Hey up guys, this is Patrick Cura, your prof next door, and for today's video, we will be discussing financial ratios. Let us continue with our discussion with financial statement analysis. To recap, we have discussed the different financial statement analysis tools and techniques, specifically horizontal analysis and vertical analysis. For today's discussion, we will be proceeding with financial ratios. Gross profit analysis and cash flow analysis will be covered video with ratio analysis. As you can see, when we say ratio analysis, it involves the development of mathematical relationships among accounts found in the financial statements. It provides users with relevant information about the firm's liquidity, solvency, stability, profitability, and other aspects of an entity's financial situation and potential. So kung makikita nyo po dito sa aking PowerPoint presentation, I've put the Power Rangers because again there are a lot of ratios that we compute in management accounting. However, I've only chose 23 important ratios and I classified them into 5 groups. Now, ang strength po ng ratio analysis is that as compared to horizontal and vertical analysis, in here pwede kang tumatawid ng financial statements. Kunyari, sa horizontal analysis, ang pagko-compare mo lang period to period. Same financial statement. On the other hand, pag sabing vertical analysis, only one financial statement at a time. So, kunwari, if you will compute your common size, profit margin, etc., hindi ka tatawid ng ibang financial statement. Sa ratio analysis, dito, ginagamit mo both the balance sheet and the income statement in order for you to arrive at an interpretation. Let's proceed to the first ranger. We have the liquidity ratio. So dito it is the yellow ranger, no? The meaning of liquidity. Liquidity refers to the company's ability to pay currently maturing obligations, okay, which are your current liabilities, and these are composed of 2 classifications, right? We have your trade and other payables and accruals. Meron tayong 4 na ratio under liquidity. We have the current ratio, we have the net working capital, we have quick ratio or the asset test ratio, and we have the net monetary assets. So as you can see, itong 4 na ratio na to, magkakapatid sila. Bakit? Kasi pare-pareho sila ng apelido. Yung apelido nila is CL. CL stands for current liabilities. Now, si current ratio at saka si net working capital, same sila ng first name. And their first name is CA or current assets. Okay, nag-iba lang sila sa operations. So, si current ratio, it's current asset divided by current liabilities. While net working capital is current assets minus current liabilities. Next, we have the quick ratio or the asset test ratio. The formula is quick asset divided by current liabilities. And on the other hand, net monetary assets is quick assets minus current liabilities. Now, what is quick asset? Pag sinabing quick asset, it is only composed of 3 things. We have the cash, accounts receivable, and marketable securities because you can quickly convert them into cash. Now, prepaid expenses, if you will be able to encounter them in a problem, these are not included as part of your. Next, we have your pink ranger. We have the efficiency ratios, also known as activity ratios. So dito, meron po tayong dalawang general formula. We have the turnover at saka yung age. So magkapatid tong dalawang ito. Pag nagsosolve ka ng problem, they go hand in hand. Pag sabing turnover, okay, the general formula is income statement account sa numerator divided by the average balance sheet account sa denominator. On the other hand, when we say age, the formula is number of days in a year sa numerator divided by turnover sa denominator. Now, let us proceed with the rules when it comes to your computation of your average. So, kapag kinukuha ang average, we divide beginning and ending by 2. Okay? Paano kung ang given lang sa problem is beginning? So, we compute average by beginning plus 0 divided by 2. Now, paano if ending lang ang given? It is assumed that the ending is already your average. Okay? So, how about the number of days in a year? If it is being asked in the problem, okay, you need to assume that the number of days in a year is 360 days. Why? Because we assume you need. Okay, let's proceed to the specific formula. So we have the receivable turnover. Okay, remember the rule? Income statement account sa taas, average balance sheet account sa baba. So receivable turnover is net credit sales divided by average accounts receivable. Ang kapartner niya is yung age. So we have age of receivables. The formula is number of days in a year divided by receivable turnover. Age of receivables is also known as your receivable collection period and days in receivable. So, depende yan sa book na gamit mo. Pero pare-pareho lang po yan. Now, kailan mo ginagamit yung receivable turnover? It is used to compute how fast do you collect your receivables, yung pautang mo. Now, each of receivables, kinocompute niya kung ilang araw before mo makolekta yung receivables mo. Okay? Next, we have inventory turnover. So, we have cost of goods sold divided by average inventory. Then yung kapartner niya, we have age of inventory. Number of days in a year divided by inventory turnover. Age of inventory is also known as inventory conversion period and days in inventories. Inventory turnover naman, kinocompute niya gaano kabilis mabenta yung mga goods mo. While age of inventory computes how many days before mabenta yung mga goods mo. Next, let's go with payable turnover. Payable turnover is equal to net credit purchases divided by average accounts payable. Ang kapartner niya, age of payables. And we compute that by number of days in a year divided by payable turnover. It is also known as payment deferral period and days in payables. Now, ano naman ang kinocompute natin kapag payable turnover? Kinocompute natin siya gaano kabagal or kabilis magbayad ng utang. While age of payables is gaano kahaba yung panahon before mo bayaran yung utang mo. Now, we have the normal operating cycle. So, palagi natin na-encounter to sa financial accounting. In management accounting, we have a formula for normal operating cycle. And what is that? That is age of receivables plus age of inventories. Then we have the cash conversion cycle. Cash conversion cycle is age of receivables plus age of inventories minus age of payables. Next, let's go to your Blue Ranger or the solvency ratio. What is solvency? Solvency refers to whether the cash flow of the company will be sufficient to cover and pay its debts. So in here, we are looking at the long-term liabilities of the company. Okay? So first is we have the times interest earned. What's the formula? That is EBIT divided by interest. When we say EBIT, that is earnings before interest and taxes. Now, bakit natin kinocompute ang times interest earned? It is the amount of operating income available to cover interest payments. Okay? So, the higher the times interest earned, the better kasi naku-cover mo yung kailangan mong bayaran. Okay? When they fall due. Next is we have debt ratio. Debt ratio is total liabilities divided by total assets. So, ilan sa assets mo ay galing sa utang. Okay? Next is we have the equity ratio, yung kabaliktaran ng debt ratio. The formula is total shareholders' equity divided by total assets. We compute here how much of your total assets came from your shareholders' equity. So, in order for us to make these two important, we should say that debt ratio plus equity ratio is equal to 100%. And lastly, we have debt equity ratio, which is total liabilities divided by total shareholders' equity. In here, we use it to evaluate long-term financial stability of the business. Now, let's go to the Red Ranger or the profitability ratios. Ito yung madalas na tinitingnan ng mga investors kung gaano ba ka-profitable yung isang business. In here, We have your return on assets or ROA, which is also known as your return on investments or ROI. Then we have the return on sales or the ROS, also known as profit margin. We have what we call the DuPont formula. Okay, the DuPont formula will help you compute your ROI or your return on investments. The formula is ROI is equal to martyr. So may kwento po yan. Si Roy daw, martyr sa pag-ibig. Okay, so what is the meaning of martyr? MAR stands for profit margin multiplied by asset turnover. Ano bang formula ni profit margin? The formula of profit margin is net income divided by net sales. While asset turnover is net sales divided by total assets. So as you can see here, we can cancel out net sales kasi meron siyang denominator and numerator. So we will arrive at the simplified formula of net income over total assets. So it is the formula for ROI. However, we use the DuPont formula para we hit 3 birds in 1 stone. So you just memorize ROI martyr para alam mo na yung tatlong formula natin. Now, why do we compute ROI or return on investments? We want to know how much of our total assets is being used to generate our income. Next, we have ROE or the return on equity. Kapatid ito ni ROI. Kung si Roy daw is martyr sa pag-ibig, hindi magpapatalo si Roe. Siya daw ay martyrer. So, anong ibig sabihin ng martyrer? MAR stands for profit margin, multiplied by TUR, which is asset turnover, divided by ER or equity ratio. So, expound natin siya. Net income divided by net sales, that is your profit margin, multiply by net sales divided by total assets, that is your asset turnover, divided by total shareholders' equity over total assets. Ito yung dun sa ating solvency ratio, right? So, ganyan yung magiging itsura niya. Now, remember, kapag division siya, okay, para gawin natin siyang multiplication, magbabaliktad yung denominator at saka numerator. So, it will become like this. So, total assets divided by total shareholders' equity na nun siya. And then we cancel out net sales kasi meron siyang numerator, meron siyang denominator. We can also eliminate total assets kasi meron siyang denominator, meron siyang numerator. So to simplify this formula, we will get net income over total shareholders equity. This is the formula for ROE. Now, bakit natin kino-compute ang ROE? ROE is computed to determine how much of the income would the investors be getting. So how efficient are we using our shareholders' equity in order to generate our income for the business? Now, what income figure should be used? So ano bang gagamitin natin? If operational performance is being measured, income is expressed before interest and taxes. So EBIT yung gagamitin mo. If total managerial effort is being evaluated, income is expressed after interest and taxes. So ang gagamitin mo dito, IT naman. If the DuPont technique is used, yung tinatawag natin kanina, si Roy at saka si Roe, income must be after interest, tax, and preferred stock dividends. Let's proceed to our last ranger. We have the market test ratio, also known as the growth ratio. So we have the green ranger. So dito, we have 3 cast of characters. So dito lang iikot yung formula natin. We have the market price, we have the dividend, and we have the earnings per share. The first formula is the price-earnings ratio, also known as PE ratio. Ito madalas itong ginagamit kapag nagtitrade ka na sa stock market, no? Chine-check mo yan. The formula for PE ratio is market price divided by earnings per share. Ano naman ang purpose? Bakit natin pino-compute ang price-earnings ratio? The purpose of this is to determine how much does an investor is willing to pay for every 1 peso earnings. Okay? So, ilan ba yung willingness na bayaran ng yung investor for every earnings ng company? So, dito, kapag mataas ang PE ratio mo, ibig sabihin, expensive yung stock. While kapag naman mababa yung PE ratio, ibig sabihin, cheap yung stock mo. Okay? However, there are certain factors that you need to know in order to interpret further your PE ratio. Next, we have the dividend yield ratio. Pag sabing dividend yield, okay, nasa pangalan, dividend yung una. So, ang numerator mo, dividend. So, yield yung pangalawa. So as you can see, ang other term for yield is market. So that is your denominator, market price. So the formula is dividend divided by market price. Ano naman ang kinocompute natin kapag dividend yield? We compute the amount of money given to investors as compared to the market price of the stock currently. So dito, the higher the dividend yield, the better. However, you also need to get other information to interpret this further. Okay? And lastly, we have the dividend payout ratio. So nasa pangalan ulit, dividend, okay, yung una, so yun yung numerator mo. Payout, yun yung pang-denominator mo. When you say payout, yung binibigay mo sa mga investors, so that is your what? Earnings per share. Okay? So ano naman ang gusto nating malaman kapag kino-compute ang dividend payout ratio? We want to know how much is the amount of money given to investors out of the current earnings of the company. Okay? So hindi naman kasi lahat ng earnings ng isang kumpanya dinideclare o binibigay sa mga investors. So ito ang magiging gauge mo kung ilang percentage yung nadideclare o nabibigay sa mga investors mo. Now, how do we compute for the earnings per share? To recap, the formula for earnings per share is net income minus preferred dividends divided by number of ordinary shares outstanding.